Welcome to Take Stock Live, investor webinar series, which goes live every Wednesday at 15 minutes after market close. The current season 3 will run through the end of March with a strong emphasis on mining. And now, of course, I'm going to make a liar of my speaking notes. Next week, we will take a break and return on March 3rd with Taiga Gold and other companies. We thank the TMX Group and TSX Venture Exchange, our event partner, for helping us keep the conversation between companies and investors going in these very unusual times. Thank you, TSX Venture Exchange. We also recognize the vital support provided by our core sponsors, Fasken, MNP, Lead Jones Gable, and Olympia Trust Company. We'd also like to thank our supporters, InvestmentPitch Media and the Newswire, who help us get it out there for people. And thank you also to our extended network for their support, Calgary Meg and CIM, CHF, Conduit IR, and others. And today in particular, Sterling Merchant Capital, who are today's co-host. Sterling is a Calgary-based IR firm founded in 2005. The firm's objective is to link investors and sources of capital to growing public companies. Sterling focuses on setting up effective roadshows for TSX, TSXV, and CSE listed companies in the Canadian investment community, consisting primarily of one-on-one meetings with the management of public companies and investment advisors at IDA member firms. Sterling strives to bring out the best small cap ideas. Some housekeeping matters. You may note a red Reconnect tab at the top of your screen if you lose audio. Just click it and you will be reconnected. The chat board may be utilized in this session. Please be clear as to whom your question is being addressed, and we will try to get to it. Note our disclaimer. This presentation is for information only and is not a solicitation to buy or sell stock. Companies pay fees to present at Take Stock, and Take Stock, its principal Raj Joshi, and yours truly, Mark Francis, may have equity investments in companies which present, may consult to the companies, and make no representation or investment or other recommendation in regards to these presenting or any other companies. You should do due diligence, go to SEDAR, connect with the companies directly in order to get detailed information, and seek professional investment advice. Contact details for the presenters can be found on the chat board now, will be posted at the end of today's show on the screen, and also on our website, takestocklive.com. Today, we have 3 companies from Sterling Capital: Goliath Resources, Steppe Gold, and Trillium Gold Mines. And we are most pleased to have Sam Greer with us today. Sam?
Well, thanks very much, Mark. It's always a pleasure to be here. As you mentioned, we have 3 gold stories that we quite like at Sterling. Goliath Resources, which is a gold story in BC's Golden Triangle and the Abitibi Greenstone Belt in Quebec. Trillium Gold, which is a gold story in the Red Lake District of Ontario. And Steppe Gold, a precious metals play in Mongolia. All 3 companies have outstanding mining executives at the helm here, and I'm very pleased to announce our first presenter, Russell Starr, the president and CEO of Trillium Gold. By way of background, Russell holds an MBA and a master's degree in economics from Queen's University. He has over 20 years of corporate finance and M&A experience. He has held senior positions and advisory roles with financial institutions, including RBC Capital Markets, Scotia Capital, Orion Securities, and Blackmont, where he has helped raise over $1 billion for junior and mid-tier companies. He's also the co-founder and part owner of Echelon Wealth Partners. And after leaving Bay Street, Russ was he was the VP of Orin Resources and Caden Resources, which was successfully sold to Agnico Eagle for $205 million. Russell, it's always a pleasure to have you here. Please tell us about Trillium.
Russ, your mic isn't on.
Sorry about that. I made the first flub of the day by not turning my mic on. Sam forgot to mention the one key distinction as well with me. I was in Cub Scouts with Sam. Look, I'm going to keep this very, very high level and very simple for Trillium. Trillium was formerly known as Confederation Gold. Confederation had a 50-50 ownership structure on the Newman Pod project in Red Lake in 2013 with a company called Red Star. Red Star is now known as Heliostar, and of course, Confederation is known as us, Trillium. Market cap at that time was $200 million for the Newman Todd asset. We now own 100% of the Newman Todd asset, and we have a head start. Unlike many juniors, there's 55,000 meters of historical drilling at Newman Todd, and literally grades would astound almost anyone. It's one of those weird episodes of a very, very large disseminated breccia body called a stromatolite, permeated with those famous Red Lake carrying gold grade veins. What we've done since then is we've also brought in nothing short of a spectacular exploration portfolio along the Confederation Greenstone Belt. For anyone who's basically buying in the mining sector and buying gold, people will appreciate that Great Bear's Dixie discovery sits on that belt. And it's our view that now that they've established that this traditional VMS belt hosts also gold, that there's likely multiple occurrences. As you know, with Mother Nature, she tends to repeat herself. But we've also added a project that really truly is kind of a one in a million. We own the Gold Center project as well, 80% ourselves, 20% with Rupert Resources. And that is the continuation, likely, of the Red Lake mine. And Red Lake is the Red Lake mine, the Campbell mine, is famous. 25.6 million ounces of gold at greater than 15 grams per ton. What this means for you as a shareholder, I will go back and forth a little bit, is that you're now participating, if you happen to buy our stock, in literally the largest landholder in Red Lake. The Globe and Mail just had a massive article on Red Lake and how it's basically having a renaissance. Evolution is spending multiple hundreds of millions of dollars to grow their assets at the Red Lake mine. They're now going to put a shaft into the Koshner mine, I believe, to try to get into some of the lower grade material. But you're effectively buying into someone or something that has a dominant land package in literally one of the world's most prolific gold jurisdictions. Importantly, as I skip back just to confuse everyone, importantly, we have approximately $8 million in the till now. This is off a bit, says 6.5. It's closer to 8. And management owns 40% of the company. In my world, if you're ever wanting to invest in a company, you should be doing so where the management owns a substantial portion of the company. The other factor that I would point you out to is that we only have about 50 million shares outstanding. So not only are we sitting on a fabulous share structure, but it's a share structure where management and insiders own almost a majority position in it. And if you include the friendly retail parties, we in fact do. Institutions own about 22% of the company, and so you're literally buying into, if you do choose to, buying into a company that is embarking on close to a 50,000 meter drill program, is cashed up basically to the end of the year. Management is extremely oriented or well oriented with all shareholders, and we just have this dominant land position, as I showed you in the Red Lake jurisdiction. Quickly to Newman Todd, everybody can follow the management slide or look back on it. I guess I would point out that we just brought on Rohan Hazelton, who's the ex-CFO of Goldcorp Mexico. And of course, Bill Patterson and his team have close to 150 years of experience in the Red Lake area. What else is really interesting about our assets, and in particular Newman Todd and of course Gold Center? The 55,000 meters of drilling at Newman Todd is from surface down to about 400 meters. And as you can see, these jurisdictions are famous for how deep the mineralization continues. So you have this weird combination of a breccia body carrying high grade and low grade, very amenable, we believe, to open pit mining. And then you have Gold Center, which has never ever been tested for the continuation of the Red Lake mine. You can't see my cursor, I do believe, but if you look at that question mark, that's where we're going to be drilling here very, very shortly to test whether or not we do indeed have the continuation of the world famous Red Lake mine. And boy, oh boy, would I want to be a shareholder if and when we do hit that continuation. I'm just skipping ahead. We do have a very large land package that is fantastic. I just want to show you a brief smattering of some of the historical grades to show you just how prolific this project could indeed be. You can see on this slide 27 meters of almost 6, 16 meters of almost 9, 31 meters of almost 13. These are grades that on any project anywhere in the world would be economic, and we just happen to be fortuitously intersecting these type of grades in a project that's only 18 kilometers away, maybe 20, from both Evolution's mills and Battle North's mills. So, you know, if I was a betting man, and clearly I am since I'm in the junior gold sector, you know, I'd be betting on these ounces going on into one of those two operations. I don't believe that we're ever going to get a chance to put this mine into production ourselves, just because there's 4 mills in the Red Lake area and none of them are running at full capacity. And it clearly makes us, in my opinion, an exceptional target for some sort of an acquisition. The last slide I'm going to leave you with very quickly is a picture of some of the high-grade gold. But more importantly, Gold Center. You can see here the continuation of that, or what we believe to be the continuation of that mine, the Red Lake mine. Currently, Evolution is working, drilling, and exploring 300 meters away from our property boundary. I know time is tight. I'm going to leave it with you.
Thank you very much.
Thank you.
Okay.
Russ, that was great. Thanks very much for that. I'd like to introduce the second presenter, Anil Vara. He is the Executive VP and Director of Steppe Gold. By way of background, Anil holds an MBA from the Goodman Institute of Investment Management at the John Molson School of Business. He has over 15 years of capital market experience and is the founder and managing partner of Atma Capital Partners Markets in Toronto. He's held previous roles with Goodman and Company Investment Counsel and Dundee Capital Markets. Anil has also worked as an investment banker focusing on go-public transaction and financing for both private and public companies, and collectively has worked on over $1 billion in deals. Anil, great to have you here. Please tell us about Mongolia's premier precious metal company.
Thanks very much, Sam, and thank you everyone for joining today. And it's good to be back. I believe I did a Take Stock just under a year ago, if I recollect. It's flown by, but for those who are new to the story, we are Steppe Gold, listed on the main board of the TSX under STGO. We are one of the world's newest gold producers, having started gold production last April 2020, and in what would be a very tough time globally with this pandemic that we're slowly getting out of. So we're very happy to be producing gold, generating our own cash flow, and really just getting started. So we listed the company in May 2018 when gold was about $600 less, when we still had to build a mine. We had permitting risk, finance risk, build risk, capex risk. So a lot of risk, I guess, in terms of execution. Here we are 2.5 years later. We built our first mine. It's a heap leach operation that's in production today. Gold has moved up, even with today's pricing, roughly $600. We have about 30 million US plus on the balance sheet today that keeps growing with a high margin gold production from what we call our phase 1 starter mine. So I guess most important is we listed the company at $2. saying all of that. Just what I mentioned. So we certainly haven't re-rated as yet. So there's still a lot of opportunity. I would say a fairly tight share structure with under 70 million shares outstanding today. And on a fully diluted basis would be roughly 95 million shares, with about 45 million of cash that comes in. We have a lot of support in country from Mongolian nationals. Board of management own almost 20% of the company today. And we have a lot of support from family offices around the world. Eric Sprott also investing in our company, his first Mongolian investment recent last summer. And of course, Elliott and Triple Flag are very strong backers of ours. So what we did in 2017 as a private company was set it up here in Canada with the goal and aspirations of building Mongolia's premier precious metals company and a production profile and resource profile that could grow to mid-tier status, or maybe it's a different name these days, but certainly a production profile of 250,000 ounces plus and a resource profile of 5 million ounces plus. What we've done is taken a staged approach. So we have 2 projects in the company today, with our leading project and cornerstone asset being the ATO project. So we purchased this privately in 2017 for $20 million US from Centerra Gold. So Centerra had previously spent about 30 million US in this project, drilled 67,000 meters, 28,000 meters of trenching, but most importantly, they got a fully licensed and permitted for the heap leach that we just built as our phase 1 operation, but also our phase 2 expansion project, which is a CIL plant and flotation circuit. So we bought a build-ready, fully permitted project, but took a phased approach in terms of the low-hanging fruit, low capex heap leach operation first. Building that, which is the oxides right from surface down to 40 meters, allowed us to establish ourselves as a producer, a taxpayer, a royalty payer, and an employer in the country. Most importantly, generate our own cash flow to grow our business. And that's what we're doing today. We're currently producing at a roughly $750 all-in cost, which life of mine will track closer to about $700 on the phase 1 and won't be too dissimilar in phase 2. This ATO project, which I'll get to on a later slide, is located just south of Russia, and you have China to the east. So we're certainly in the right jurisdiction in terms of scale potential. Mongolia is home to world-class discoveries and mines. Most people will know about Oyu Tolgoi project with Rio Tinto, and we want to be the team that focuses on precious metals, where we believe this country is relatively underexplored, 6% or so explored, and a lot of opportunity for new discoveries and growth. This project is just located south of Russia, as I mentioned, where there are large epithermal gold deposits like ours that are 5 million ounces plus, 10 million ounces plus, and in production. So we do see the scale, the scale potential in this project. Our second project is a very large exploration license in the southwest of the country. So there are no synergies, but it's an undrilled license that has been drilled all around. And I'll get to that on a later slide. I'm going to scroll through quickly to highlight our current operation infrastructure. This is what we've built over the last couple of years. And so now what we have today is in our first 9 months as a producer, still in startup ramp-up mode in 2020, with travel restrictions in place, we've been able to produce roughly 35,000 ounces, generate a very strong margin, generate cash flow, and use that cash flow and cash on hand to grow our business in 2021 and 2022. So it's a nice, robust starter project that allows us now to fund our exploration as well as our expansion alongside some debt. The second project we have in the company today, which I'll get to shortly, I just want to get back to the ATO project here, this is the phased approach I mentioned earlier, of how we focus on the oxides, which is ATO 1, 2, and 4 here on the left side. Right from surface down to 40 meters is the phase 1 oxide mine. So if we did nothing else today, we could produce for the next 3 to 4 years at about $1,650 gold price, generate about 40 million US of EBITDA and 25 million US of free cash flow. That's free cash flow net of sustaining capex and actually exploration on both of our properties. So, not a bad starter project that leads and funds into our phase 2. When we took over the project, we reviewed all of Centerra's drilling in all their data set, and we reinterpret it. And that's where we've had some wins as well. So if you look at the box to the right, you can see ATO4 and this new discovery called Munk. So Munk means silver Mongolian, has never been put into a resource report, has never had any technical work completed on it. We've now drilled on Munk over the last 2 years, almost 20,000 meters, and we'll have a maiden resource on Munk as well as ATO 1, 2, and 4, which will lead to a phase 2 expansion this summer funded from cash flow and debt, which I'm sure questions will come up. I guess my time is up, so we'll get to the rest of the questions. But thanks everyone for taking the time.
Thanks a lot, Anil. That was great. And I'm very pleased to announce our third presenter, Roger Rosmus, the CEO of Goliath Resources. By way of background, Roger holds an MBA from the University of Western Ontario at the Richard Ivey School of Business. He has over 25 years of investment and banking experience in the public sector and was the president and founder of Aberdeen Gould, where he completed over 30 M&A transactions. Roger has also owned and operated several successful businesses in a wide variety of industries. Roger, great to have you here. Please tell us about Goliath.
Yeah, great. Thanks for having me on, and thank everyone else for joining in. I'm going to share the screen now. Yeah, essentially, Goliath is a fairly new company, incorporated in 2017. We took it public October 2017, October. Since then, we've been focusing quite extensively in British Columbia, primarily the Golden Triangle surrounding area. Recently acquired some projects in the Abitibi-Greenstone belt of Quebec, but currently right now is our focus is on our brand new discovery in the Golden Triangle at our there we go, at our Sherbet zone at the Gold Digger property, which is just right in the southern tip, just southeast of Stewart. Just quickly, myself, obviously we've had some information there. The key to what our team now is Dr. Quentin Henning. He's a world-renowned geologist, technical advisor to the firm. He's had extensive experience, has been extremely helpful with us designing our drill program for 2021, coming up to test our Sherbet zone. Current share structure, just over 38 million. It's a little bit higher at this moment because folks have been exercising warrants, but fully diluted basis, call it 73 million roughly shares. Management of in the team 15%. Crescat Capital is a resource fund. They own currently about 11.4%. We just announced a deal last week on the 10th of February. Eric Sprott's coming in for $2 million, which would represent roughly about an 8.5% interest in the company. And Crescat is looking to maintain a 9.9% ownership on a go-forward basis. So you can see on the map here, we've got the Gold Digger property south of Stewart, really close to, I guess, the Furry Gold now, at the old Oran mine, and obviously the Dolly Varden mine. So we're close to existing deposits in the right geological setting. Our Sherbet zone we discovered last year is quite extensive. We were fortunate to have this shear zone at surface for over a kilometer of strike. We've got 500 meters of vertical relief and about 1,000 meters of down dip extent down the backside of the mountain. The team did go in and we took extensive channel cuts last year, essentially horizontal drill holes, because we've got essentially it's a cross section of a drill hole of at the top of the mountain and all the way down the mountain as best as we could. We had an average width of almost call it 10 meters, or just under 10 meters, average grade of just under 11 grams per ton gold. And I've got a short video here that kind of really sums it up. Oh, okay. So essentially, it's a video that's on our webpage and YouTube channel. It's our conceptualized shell, I guess, body that we're hoping to drill into this year, an auger drill program. This is a brand new discovery, never been drilled before. Dr. Henning believes or hopes that we can come away this year to show conceptually we've got sort of 1 to 2 million ounces gold equivalent. You can see the map on the left. That's the sure bet zone. Through the LiDAR, we've picked up, close to over 20 of these structures that really haven't been tested. So it's over within a 4 square kilometer area. So we believe this is just the tip of the iceberg of some pretty exciting things to happen this coming year. To the right, we've got, you can see the location to the Homestake Ridge deposit, the Dolly Varden mine. We're 7 clicks to the Dolly Varden access road. And then you can see that red line running through the project. Basically, that's the contact point between the Hazelton Volcanics and the Stahina Group. And it's a known fact that all the major deposits have been found within 2 kilometers of either side of the red line. I see my time is up, and I look forward to any questions. Thank you.
Very good. Thank you very much. And let's bring Roger and let's bring Aneel back as well. As Roger, stay on screen, and Russ. Let's have you all come back. And now we have the Q&A session. So a question for each of you, and let's have the order for this first one, Russell, Aneel, and Roger. Can you be more explicit on your exploration objectives for the next round of drilling in each case?
Sorry, I turned the microphone back on there. Look, our objectives are quite simple. Based on how close we are to literally 2 operating mines, but one of the world's largest and highest grade mines, our goal is to get the Newman Todd deposit to somewhere around 1.5 million 43-101 compliant ounces resources. And then clearly on the gold center property, it's going to take maybe 1 or 2 drill holes to prove up the continuation of the Red Lake, the world famous Red Lake mine. Those are our 2 key objectives, and then a lesser third objective clearly would be to utilize our geological team and the AI company that we've engaged to try to define and find another, hopefully as prolific as Dixie Great Bear discovery. That's it.
Mike, Aneel.
Oh, Aneel, the mic.
Got it. Perfect. Can you hear me now? Yeah, so our focus for exploration, I think, as I was getting into quickly on the presentation, we have 2 properties. The last 2 years really has been infill and extensional drilling at ATO and Mung to get the maiden resource on Mung, which we're putting out in a matter of weeks, and update ATO 1, 2, and 4. Now that we've have cash flow and the resources, we get to focus on some deeper drilling. So we haven't drilled really past 400 meters. So all of these 4 deposits have only been drilled to about 400 meters of vertical depth. So they're still open at depth, especially Mung, where you're seeing a downward plunging component, higher grade shoots to chase finally. So we now have the money and the time and resources after we built our first mine to focus on some of the expansion opportunities, both on the 4 deposits now, as well as stepping out along the trend, the 20-kilometer trend that ATO4 and Mung are on, to hopefully discover some other deposits on this property. It's about 5,400 hectares. Our second focus will be on our large exploration license, the UK license in the southwest, undrilled. We're the first owners, but has been drilled all around, with Erdene Resources having drilled about 1 million ounces between their 2 deposits adjoining ours. So we're starting that next month. We're going to start there first before we start ATO and Mung. So that's really our focus for near-term exploration, I guess, on both properties.
Yeah, I'd mentioned that the Sherbet zone is a brand new discovery, never been drilled before. The plan is a fairly extensive program, roughly 4,600 meters. We'll be testing the shear zone where it comes out at surface, stepping back to essentially try and find a width below the surface that we can't see, and as well we'll be stepping further back where we can or hope to intersect the body showing that it is consistently, running through right through the entire mountain side of things. So again, we hope to conceptually come out of this year with, demonstrating 1 million to 2 million ounces gold equivalent, keeping in mind where we've got the 1 kilometer strike down the hill. We've got another 1,000 meters or another kilometer that goes down to the bottom of the valley. So we're quite confident that most likely it continues on down into the valley, which we'll attack in 2022. That'll be more exploratory type drilling. But initially, it's just to establish that, hey, we've got something pretty significant here, and that'll get kicked off. We'll mobilize in May and build all the pads. We're talking about roughly 14 pads, and again, 4,600 meters, and start drilling by sort of end of end of June, beginning of July.
Very good. And Roger, you've, of course, now answered my second question, which is the timing of that exploration. So let's go to Aneel and then Russ. Tell us about the timing of your next round of results.
Sure. For the UK project, which is our maiden drilling down there, we're going to start drilling towards the second half of March, so not too far. We'll mobilize our first drill rig second half of March, and results, I guess, will flow in depending on the backup of the labs in country, which there is, given the COVID situation. I guess towards second half of April and May and ongoing. And we'll continue to drill there all the spring, summer, and probably into the fall, depending on the results, which we obviously expect to be fairly exciting given what's happened down there. And then ATO and Mung will start more in the April timeframe with results flowing there from a new drilling at ATO and Mung at depth, and some other discovery or step out drilling, I guess, starting June. And then July, and continuing to flow again right to the fall. So we'll drill until about November on both properties.
Look, and on our end, we've got two drill rigs turning right now. We're going to have a third turning probably in the next week or two. As I mentioned, we have 55,000 meters of historical drilling. We finished another 7,000 ourselves. We've hit VG or high grade or plus 100 GT intersections, almost every drill hole that we've come out with thus far. Clearly, this is not a great market for junior gold companies at the moment, but yeah, our objective is to drill between 40 and 60,000 meters this year. And like I said, come out with a meaningful resource and perhaps the discovery and continuation of a world-class mine.
Good. And Roger, back to your project for a moment. Do you have any indication of the true width of those of the zone that you've discovered?
Yeah, based on the channels that we've taken, we're talking this, roughly 10 meters wide, but the mappers did map out the shear zone. I think it's about 40 to 50 meters wide that they couldn't sample because we got cliffed out. But at the moment with what we've done, the average is, let's call it, roughly 10 meters, and pretty awesome grade. So anyone can do the math. If that grade continues with that width for the numbers that I've shared with you with our 3D model, our conceptual model block, this could be something pretty significant to be uncovered this year.
Good. And Russ, going back to you, you have a lot of properties. Is there a risk of distraction here?
No, not really. The carrying cost for the vast majority of the Red Lake greenfield exploration projects is de minimis. Our focus is clearly on Newman Todd. I didn't mention we picked up the neighboring property. We call it the Newman Todd project. So our focus is clearly on that and Gold Center drilling. And to answer that question a little bit better, Red Lake has basically been cut up into a patchwork of thousands of companies that have very, very small land packages. Our view is that if you're going to become an appetizing target for a major, you need to have a district scale. And that's the reason behind the larger land package and currently being the largest landholder in Red Lake. So we have our focus. We know exactly what we're going for. But that other Confederation Greenstone Belt is just a fantastic fantastic opportunity to hopefully find another Great Bear.
And how are you dividing up your exploration between Newman Todd and the other project, percentage terms?
65, 35. It could be even higher at Newman Todd Rivard. It really, if you appreciate junior mining, it's an iterative process. If you're missing at one project, you're going to pour more money into the other. Right now, we continue to hit at Newman Todd, so we'll be spending the bulk of our resources at Newman Todd. And if it's 50,000 meters, it'd be 35,000 Newman Todd project, 15,000 Gold Center ish.
And final question. I gather then that you will not be optioning out any of your properties because you want to keep the whole land position to yourself for the purposes of your strategy?
Look, never say never. I'm not a big believer in optioning or JVing. We do have a grander view of the market, and if we can execute and become a producer, just like what Aneel's pitched is fantastic, where you can actually self-finance. That is an objective of ours. So I don't want to say never, but the view is that this package is important and will help us achieve either an asset sale or some sort of a production scenario. Okay,
thank you. And now let's turn to Aneel. And Aneel, this is maybe the meanest question of the day, but I want, in the context of describing local relations and any specific challenges you foresee,
sure.
Communist China and Communist China SOEs are becoming extremely aggressive and muscling in on people's projects using a whole variety of methods, let's just say. Mm-hmm. What is your plan to resist this and keep your ownership? And I'm assuming some local ownership is part of that strategy.
Yeah. Well, I guess, our experience in Mongolia is almost over a decade now. The core team, Matt and Bata, who's our Mongolian CEO, have already built a company in Mongolia and sold it for $500 million cash to a non-Mongolian company, to a Thai company, actually. So we have a track record of employing almost all Mongolians and being a Mongolian local company, but still creating wealth for our shareholders. And that's still the plan here with Steppe Gold. So Steppe, from day one, has been a Mongolian company listed on the TSX. Mongolian CEO, half our board are Mongolian, and all our employees in country, except for 2, are Mongolian. And we're seeing the benefits of that locally, provincially, federally. The Sovereign Fund of Mongolia made their first ever investment in a mining company into Steppe Gold. And they've also advanced through the central bank a tranche of debt financing for our phase 2 expansion starting this summer. So I think we've got the political risk concerns required to navigate in any jurisdiction is how you should do this and build a model, be as local as possible. Chinese, unless they're coming to invade the country, I can't really comment on how to protect yourself from that. But the country itself has great relationships with many countries outside of China and Russia being the main partners there and landlocked between them. It's called the third neighbor policy. So Mongolia has been focusing on building relationships with other countries like US, like Canada, the Germans, the Koreans, the Japanese, and the Indians. So there's a lot of strategic importance of Mongolia, given the situation. And I think that gives us another layer of protection. So most probably an exit would not be a Chinese at this point as well. Hopefully that answers some of that.
That's an excellent answer. I told you it was the meanest question, and you had your ammunition, and you've plainly thought about this carefully for 10 years, and you've got that. So now I want to go back to the operations. So a couple of short, sharp questions for you. On your extant operation, are cash costs projected to remain stable going forward?
Yeah, actually stable or I guess a bit better in terms of lowering cash costs, because we're still in our first year of production. We brought production online with 100% Mongolian team, given the travel restrictions. So, some of the expat experts that may be on site would have went for the gold a bit more in the last 9 months. I would say it was more conservative startup and ramp up. So our costs would have been a bit higher, and I think they'll be optimized the next quarter to a life of mine of, like I mentioned, maybe some 700 all-in costs, which means cash costs are roughly 500. So stable or better, I guess, is the answer.
Okay, these have been pretty darn good times for miners, with high prices and low energy cost inputs, at least for diesel and somewhat for explosives, which are often a function, partly the cost of various forms of energy inputs. What is your biggest variable cost?
Yeah, I mean, listen, the majority of our costs today are operating. So that's obviously employing almost 200 people full time on staff and contractors. So there's less variability there now that we have longer term agreements with the contractors and of course our salaried and paid staff. But processing costs are the chemicals. So you have the cyanide and reagents that we procure from China, as well as the diesel from Russia. Those are actually our largest monthly costs on an ongoing basis outside of, I guess those are the largest variable costs to the question. So luckily oil has moved back down and you get some of that benefit from the derivatives like diesel. Well, bottom line, they end up coming to longer term pricing again anyways. You're not buying barrels of oil, you're buying the derivatives from it. So those still, again, are longer term contracts where possible. So we haven't had a major impact on variable costs either.
Okay, thank you. And now let's come to Roger, back to Roger. Roger, I have two different questions. One is, could you explain the significance of the Hazelton group of rocks to our non-geologists in the audience?
Excellent question. Essentially, it's a series of volcanic extrusives associated with sediments that basically have the right composition to host significant mineral deposits. So most of the deposits found in the triangle reside within the Hazelton group volcanics. And I'd mentioned to you the red line, and obviously close to the red line. It's a key marker in the triangle. And again, it's a world-class geological setting that, a lot of the big deposits have been found very close to the red line. And obviously a gold digger property being essentially sitting on top of it is super, super important for us. We actually staked some additional ground just to get some additional coverage down to the southeast.
Okay, and now let's talk about your logistics, because you're not quite as remote as a number of the projects, but boy, those look like pretty steep hills you're working on. So can you talk about the challenges and logistics, to what extent you have to use helicopter mobilization, and how close is your nearest road or barge at point?
Sure. Well, like most companies in the triangle, it's all helicopter assisted for the most part. We are 7 clicks from the Dolly Varden Access Mine Road, and about a 20-minute flight out of Kitsault, which is right across, about a 2-minute ride to helicopter ride to Alice Arm, where there's a deep water port. So that's about, call it 20 clicks away. And so we'll be based out of Kitsault this year. We'll be flying all the core out to our facility there, cutting and sampling and logging and so on and so forth. And then obviously shipping core out by road down to the various assay labs for testing. So logistically, it's not too bad. I know Hecla's going to be there this year. Dolly Varden, well, actually, they bought Alice Arm, so they're going to be there quite extensively for this year as well. So it's going to be a beehive of activity there. So overall, I'd say we're not way up in the mountains there. We're pretty close to power, roads, deep water port, and so I think it's from a CapEx point of view, if this company, if it ever does go to production, we find something significant, then I think a lot of those infrastructure components are already built in.
Good. And let's stay with you, Roger, because each of you have properties that you have not really talked a lot about. Is there something you'd like to add about your Chibougamau property? And then let's go with Russ and Aneel.
The Quebec properties, early stage, grassroots. Essentially, we've got a full stop on spending any money because we can get the biggest bang for our dollar, for the shareholders' dollars that have been put into the company at Gold Digger. So we'll revisit these other properties at a later date. We want to really again focus our efforts on the Sherbet zone. And if we come out of there with conceptually a 2 million ounce gold equivalent deposit, then we're off to the races, and we can address Quebec properties at a later time.
For us, like I said, I mean, our focus remains on our 2 nearer term production scenarios, and that's where, especially in this type of a market, you want to focus. You don't want to be necessarily spending money on exploration opportunities that cost the same equal dollar, but may not result in any bang for your buck in the actual share price. So we're similarly inclined as Roger, and we'll focus on our key more near-term production assets. That being said, we are receiving some of the information from our AI program that we ran, and it looks like we do have some pretty good targets on some of the other properties. So come spring breakup, we might have a GO or two taking some rock samples, nothing too expensive, just to see what's going on in those particular areas. And that would be the answer.
Yeah, I think that I touched upon it briefly earlier on. The UK project has never been drilled. So that's something that we couldn't talk much about for the last 2 years, and we haven't focused on it because we had one focus, is get up and running on our phase 1, execute. Now we have the ability to focus on it, and we've done IP magnetic soil sampling. We started trenching last fall, and now it's, we were hoping to get to it last year, but now we'll get to it next month. And so that drilling's been very exciting given the success of our neighbors and the maybe the consolidation play down there. So that's clearly a new focus for exploration for us in very short order.
Very good. So in closing, the final question is, give me 2 milestones. Give our investors, our listeners, our audience, 2 milestones to look for in the coming months from your company. Anil, let's let you carry on, and then Roger and Russ.
Sure. I think the resource update, putting a maiden number on that Mung discovery, and just updating the ATO projects in general, I think is a major milestone. People can see the 1 million ounces we bought from Centerra, what value we've created, or how many more ounces are on our balance sheet today from the limited exploration or drilling that we've completed there. So that's, I think, one. And the second probably is the feasibility study on the expansions. People can see what the final numbers are in terms of CapEx and I guess cost profile on that production that we'll start building this summer.
Okay, I'm up next here. Yeah, I'd say the catalyst, obviously kicking off the drill program, getting the guys mobilized, and then hopefully seeing some decent results early on in the season, sometime in August. Not to mention, pardon me, the investment by Eric Sprott is a huge testament to what we're up to, or what we have found, or what we are currently holding, as well as support of Crescat Capital and Dr. Quentin Henning have been outstanding. Last
but not least, I hope, for us, it's going to be continuing to hit high grade at the Newman Todd Rivard project. Really, for me, a key catalyst or a key outcome is going to be our geological interpretation of just how important the high-grade veins are that are coming from Rivard and permeating into the Newman Todd project. With a little bit of luck, obviously, gold exploration has a lot to do with Mother Nature. We come in somewhere above that 1 million ounce mark on some sort of a 43-101 once the drill program's finished. So call that within a year, theoretically. And then, of course, the big unknown, in my opinion, and really the only comp that I can come up with was the Gold Eagle sale to Gold Corp for about $1.5 billion in 2008. That's really the only analog I have to Gold Center. And so if we can hit the continuation of the Red Lake mine, I have no belief or view that we'll get those type of valuations in this market, just because of how little attention is being paid to the junior gold space right now. But it's certainly going to be a heck of a lot higher than 0, which is what we're getting for the Gold Center project right now, if we do hit the continuation of that Red Lake mine.
Thank you, Russ. Sam, come on back for the final wrap up.
Great. Well, Mark, I want to say thanks a lot for hosting a great show. And to our presenters, these are 3 really great gold stories in 3 very different jurisdictions. We certainly will be watching this with a great deal of interest over the next few months. Mark, in closing, would you be able to show everyone their contact info should the investment?
Well, I will do that in a moment. But first, I want to say thank you to our presenters, Anil Vara, Steppe Gold, Russell Starr, Trillium Gold Mines, and Roger Rosmus, Goliath Resources. And, you know, I'm a little bit nerdy about spelling. Each of you has an R, at least one R in your name. And in your corporate names, you have GO for go. So may you have further success in both exploration and advancing your projects and businesses in the coming 6 months and year. We really look forward to that, and we will be keeping in touch on that. And Sam, thank you very much as well. We really appreciate the support of Sterling Merchant Capital. Great to have your participation. And to you, our attendees, thank you for your time today and your patience with me as the clunky administrator. You'll get Raj back on the 3rd of March. Do go to today's company's websites, learn more about them, and check in at TakeStockLive.com. Today's PowerPoint decks should be posted there by tomorrow. In the meantime, be determined in your due diligence and ask tough questions. We'll be back in 2 weeks, 3rd of March. This is Mark and Raj signing out from TakeStockLive.com.
Thanks, guys.
Thank you.
Thank you.